On November 7th, 2025, Ford Motor Company admitted it will lose a staggering $4.5 billion on its electric cars this year. On the very same day, Lucid's stock collapsed by 15%. Most people see this as a sign of a tough market. They are wrong. This isn't a market fluctuation, it's not bad luck. This is the carnage from a secret war. And today, we're conducting the financial autopsy to prove that these aren't just business failures. They are casualties of Elon Musk's ruthless, predatory master plan to bankrupt his competition. And the numbers don't lie. To understand what's happening, you have to accept a fundamental truth. There are two separate electric vehicle industries operating today. In one, you have Tesla, profitable, scaled, and armed with a financial war chest. In the other, you have everyone else. Legacy automakers like Ford and startups like Lucid and Rivian, who are all bleeding cash at an unsustainable rate. The mainstream narrative is that Tesla is simply outcompeting them with better products. That's only half the story. The other half, the one nobody talks about, is a deliberate, calculated strategy of economic warfare. Elon Musk himself hinted at this strategy, stating that Tesla can use its profits as a weapon. He wasn't joking. While his competitors are losing money on every single EV they sell, Tesla is making a profit. This gives Musk the ultimate power, the power to control the price. And he's using it to suffocate them. Let's start with the weapon itself, profit margin. This is where the war is won or lost. In the third quarter of 2025, the financial chasm between Tesla and its rivals became an abyss. Look at this. For every single car it sold, Tesla made a profit of $2,762. Now, look at the competition. For every car they sold, Ford's EV division lost a mind-blowing $80,849. Rivian lost $88,857. And Lucid set a new record for financial insanity, losing over $250,000 per car. That's $252,575 lost on each vehicle delivered. How is this even possible? It comes down to gross profit margin. Think of this as the money a company makes from selling a product before accounting for other business expenses. Tesla has consistently maintained a healthy gross margin, sitting around 17 to 20%. This is their war chest. When Tesla cuts the price of a Model Y by $5,000, it hurts, but they are still profitable. But what happens when Ford, Lucid, or Rivian are forced to match that price cut? They were already losing money. Now they are accelerating their own demise. Ford's total company gross margin is barely 7%, and that includes their profitable gasoline trucks. Lucid's gross margin is negative 236%. This isn't a business, it's a charity for wealthy car buyers. Tesla's advantage is built on three pillars that competitors simply cannot replicate overnight. First, vertical integration. Tesla makes its own batteries, its own software, its own power electronics. This slashes costs by cutting out the middleman. Second, economies of scale. Tesla's gigafactories are manufacturing marvels, pushing the cost to produce a vehicle below $35,000. They use techniques like gigacasting, which replaces hundreds of small parts with a single giant one, cutting manufacturing costs by up to 30%. And third, battery dominance. Tesla's in-house 4,680 battery cells are driving costs down and securing their supply chain, insulating them from the price shocks that plague their rivals. This isn't just good business, it's the infrastructure for a predatory war. Now, let's examine the casualties. We'll start with Ford. Ford's EV division, Model E, is a financial black hole. The company is on track to lose $5 billion on electric vehicles this year alone. That's on top of the $5.1 billion they lost last year. How are they surviving? They're subsidizing this disaster with the profits from their gasoline-powered trucks and commercial vans. Ford's traditional business is a cash cow. In 2024, it generated $10 billion in profit. They are using that money to fund a war they are destined to lose. This is a fundamentally broken strategy. As more consumers switch to EVs, the profits from gasoline vehicles will inevitably decline. The cash cow is going on a diet. At some point, likely by 2027 or 2028, that subsidy will no longer be enough. Ford has already delayed $12 billion in EV investments. This isn't a pivot, it's a retreat. Now for the startups, let's look at Lucid. If Ford's situation is a slow-motion car crash, Lucid's is a rocket exploding on the launch pad. The company is in a state of critical cash burn. As of the third quarter of this year, Lucid has about $2 billion in cash. That sounds like a lot until you see their burn rate. They are burning through nearly $1 billion every single quarter. Do the math. At this rate, they have roughly 6 months of cash left before the lights go out. 6 months. Their survival now hinges on one thing and one thing only: the continued generosity of Saudi Arabia's public investment fund, which owns a majority stake. Should the Saudis decide to pull the plug, Lucid is finished. It would become the Lehman Brothers of the EV industry, a spectacular failure that sends shockwaves through the entire market. This isn't speculation, it's simple arithmetic. And that brings us to Rivian. Rivian is walking a tightrope. Their situation is less dire than Lucid's, but the danger is just as real. They have more cash, about $7.7 billion, but their quarterly loss is still over $1 billion. This gives them a runway of about 20 months, less than 2 years to turn the entire ship around. Their big gamble is the R2, a smaller, more affordable SUV aimed squarely at Tesla's Model Y. But Tesla is waiting for them. With its massive profit cushion, Tesla can and will cut the price of the Model Y to make life impossible for the R2 before it even launches. So this brings us to a critical question, and I want you to pause and think about this. Given these numbers, this brutal reality, who do you think is left standing in 5 years? Is it the legacy giant with deep pockets but a bleeding EV division? Is it the startup with a great product but a ticking bankruptcy clock? Or is it the one who started the war? Let me know your prediction in the comments below. Don't just name a company, tell me why. I'll be reading and responding to the most insightful arguments. But don't go anywhere, because the answer to who truly wins this war is not one of these car companies. During the gold rush, most prospectors went broke. The people who made fortunes were the ones selling picks, shovels, and blue jeans. The same logic applies to the EV price war. While the car companies are locked in a battle of mutual destruction, the real money is being made by the companies that supply them. The arms dealers in this war. Let's start with the most critical component: batteries. Meet CATL, or contemporary AmpereX technology. This Chinese giant is the undisputed king of EV batteries. They command a staggering 38% of the global market. They sell to everyone: Tesla, Ford, BMW, Volkswagen, you name it. When Tesla gains market share, CATL sells more batteries. When Ford tries to fight back, CATL sells them more batteries. They are completely agnostic to who wins the car war because they supply all sides. While car companies see their margins evaporate, CATL is posting record profits. Next up, semiconductors, the brains of the operation. Electric vehicles are basically computers on wheels, requiring 2 to 3 times more chips than a gasoline car. This is a boom for companies like Infineon Technologies. They are the market leader in automotive semiconductors, especially the crucial power chips that manage the flow of electricity from the battery to the motor. Their gross margins are around 40%. Compare that to Tesla's 17%. Infineon is making more money on the car's components than Tesla is on the entire car. And finally, the raw materials, lithium. You cannot build an EV battery without lithium. It is the white gold of the 21st century. While lithium prices have been volatile, the long-term trend is undeniable. Global EV sales are projected to hit over 21 million units this year. The demand for lithium is set to outstrip supply within the next 18 months, giving immense pricing power to the companies that mine it. These supply chain companies, battery makers, chip suppliers, and miners, are the hidden winners. They have higher margins, diversified customers, and benefit from the overall growth of the EV market, insulating them from the self-destructive price war waged by the car manufacturers. So, what is the endgame? History gives us a clear answer: Consolidation. In the early 20th century, America had over 200 car companies. A few decades later, only a handful remained. The EV industry is on the same path, but on a hyper-accelerated timeline. By 2026, we will likely see the first major failures. Startups like Lucid, burning through their cash, will either be acquired for pennies on the dollar or declare bankruptcy. By 2028, the legacy automakers will face a moment of truth. Ford cannot sustain $5 billion losses indefinitely. They will be forced to either drastically restructure, find a partner, or retreat from the mass market EV space. By 2030, the dust will settle. The survivors will likely be Tesla, China's BYD, and a couple of legacy giants who managed to navigate the storm. The rest will be footnotes in history. This was never a fair fight. Tesla's price war is a brilliant, ruthless, and intentional war of attrition. Musk is using his manufacturing and margin advantage to cleanse the market of weaker players. It's a stark reminder that in the world of disruptive technology, you don't just have to build a better product, you have to survive the war. The real investment opportunity isn't in picking the winner of that bloody war. It's in owning the companies that sell the weapons to every single soldier on the battlefield. If this analysis gave you a new perspective on the EV market, hit the like button and make sure you're subscribed so you don't miss our next deep dive. And remember that question I asked earlier? I'm going down to the comments section right now to see who you think will survive. See you there. Thanks for watching.